Welcome to the Property Management Brainstorm Show with Bob Preston. Bob is the president, owner, and broker of North County Property Group, the fastest growing and top-ranked property management company in North County, San Diego. This podcast is for property owners and investors who are considering hiring a professional property management company to manage their property assets. You'll hear from leading professionals on the best practices surrounding the San Diego rental market, what's involved in successfully renting your property, and how to make sure your property is managed correctly. Now, here is your host, Bob Preston.
Welcome to the Property Management Brainstorm Podcast. I'm Bob Preston, your host of the show, broadcasting from our studio at North County Property Group in Del Mar, California. I do my best in this podcast to bring our listeners great content from experts in the home rental market. So if you like what we have to say, it would be really great and would make my day if you would pay it forward and leave us a positive review on Google, iTunes, or our website, or wherever you happen to be listening to the episode. Today on the show, we will be discussing a new concept in protecting rental properties that gives landlords additional peace of mind and protection to an investor from tenant-related risks. Now, this is different than the traditional security deposit concept that most of us are familiar with. So I'm very excited to hear more about this. And I have with me today by telephone, Dave Holt, who is a co-founder of a company called SureVestor, which provides a new form of insurance when renters are in your home. Hey, Dave, thank you for joining us today.
Yeah, thank you, Bob.
Dave, I'm sure our listeners are already curious. Probably their interest has been piqued because they probably know about rental dwelling insurance, probably renter's insurance, but I think it probably occurs to them already that this is quite different. So maybe you can start today by telling us, first of all, where you're calling from, briefly about yourself and your background, and what SureVestor is all about.
Sure, you bet, Bob. Well, Bob, I've been in property management for over 30 years. I still have a property management company. I'm in Minneapolis, Minnesota, and I see from the video that you don't have any snow on the ground. We have about 4 feet of snow on the ground right now, so so a little chilly. But I've been doing property management for some time. I am a licensed realtor as well. I am an investor. I've been investing for almost the entire 30 years. I've done about 100 different properties, everything from flips to buy and hold, subject twos to lease options, you name it. I've been doing that for a while as well. So I'm very familiar with the investing side of things.
So you're walking the talk, or talking the walk, as they say.
Yeah, you bet. And so as an investor and cash flow being extremely important, and in a property manager for this time, I'm very intimately attuned to those things that can help us in both of our businesses as investors, as in property managers. And that's what really got me interested in this whole concept. And it's something that I came across while teaching, because I'm a national instructor for our association, Bob, NARPM, the National Association of Residential Property Managers.
Right, yeah, I'm a member. What do you teach, out of curiosity?
Well, I teach a lot of different courses. I've written and teach risk management. I teach marketing. I teach operations and a host of other topics. I've had the opportunity to go over to Australia and teach for their property management forums over there as well. And one concept that I thought was really intriguing was that of landlord protection insurance. It's something that has been over in Australia for about 20 years, Bob, and it's not over here, which was really quite surprising to me. And it's a product that covers those pain points that as property managers and investors that we have, which is covering the loss of rent when something bad happens to tenant skips for some reason, has to be evicted, even murder, suicide, or victims of violence, for example.
So the things that keep landlords awake at night, basically.
You bet.
Yeah.
Along with malicious damage and all the costs associated with evictions and whatnot. And I thought, God, why don't we have that here in the U.S.? And I actually approached the founder of the company, Terry Shear, and Terry still has that. She sold the company about 7-8 years ago, but it still sells under her name over in Australia. It's the most widely used landlord protection insurance over in Australia, called Terry Shear Insurance. And we ended up partnering with her to bring the product over here to the U.S. So that's where we're at right now. And we just launched at our national convention this past fall.
Wow, that's fantastic. And so the concept, I guess, is address the things that landlords fear the most. Is that a fair way to describe it?
Oh, it is, because when you think as an investor, the things that we worry about obviously affect our cash flow. You can't really protect against that from normal means unless you have insurance. And up until now, there hasn't been the insurance. So as we know, Bob, as professionals, we do our due diligence through these screening tenants and making sure we try to get the best quality tenants for our investor landlords as possible. But we also know that bad things can happen to good tenants that you just can't plan for.
Life happens, right?
Well, life happens, right? They lose a job. They get a divorce. They have a death of one of the spouses, the wage-earning spouses. I mean, all sorts of situations that can happen in life that are unplanned for, and you can't screen for that type of stuff. And lo and behold, they skip, or they have to be evicted because now they can't pay the rent. And up until now, the landlord has had to come out of pocket for those type of things.
Yeah, it's interesting. Sorry to interrupt, but we also have a portfolio of long-term rentals, and we also have a portfolio of vacation rentals, which is a completely different business model.
Right.
And one product they have in the vacation rental model is known as a damage waiver or damage protection insurance. So it's a little bit along these lines, but it's not as detailed and thorough in terms of coverage. It pretty much only covers accidental damage. So it's kind of an interesting thing, and we require all of our renters to have it. This is insuring the renter still, though, not the landlord.
Yeah, that's a tenant liability type of insurance.
Exactly, and it's only accidental coverage. Well, okay, I heard you rattle off 3 things: malicious damage, loss of rent, maybe this isn't the right order, and eviction, a loss of, if you have to go through the cost of evicting somebody. So maybe we can explore each of those coverage areas one at a time and dive a bit deeper. Are you good with that?
Oh, absolutely.
Okay, take it away.
Well, the 3 main things that we worry about as investors and landlords is, the loss of rent when the tenant vacates the property and it doesn't fulfill the terms of the lease. And so, of course, being evicted is usually what ends up happening. And so now you have the loss of rent due to that. You have the eviction costs, and many times the tenants get some free legal advice, and that those free attorneys many times will bring it to trial, trying to make it even more painful for the landlord client as well. And so the insurance covers that loss of rent, covers the eviction costs and the legal defense as well, depending on the policy that they obtain. Sometimes, unfortunately, tenants get unhappy with that situation and maliciously damage the property on the way out. They punch holes in the wall.
The triple whammy.
Yeah, you bet. And so those are one of the frustrations that we have as property managers, certainly as an investors, that it makes that whole investing very frustrating. And most of the investors out there are not seasoned investors. They're not doing this as a full-time job. They have 1 or 2 properties that they have. When these bad things happen, they go, you know what, this isn't for me. And so they either sell or move on to blame us as the property manager and move on to somebody else. So
it's interesting. We get a lot of investors coming to us who have had bad experiences with this kind of stuff, either on their own or with another property management company.
Right.
And typically, as I dig deeper and I get to know the person and what exactly happened, it's often that the landlord, on the landlord's end, they've dropped the ball somehow, right? They've let the loss of rent or the tenant go too many months without paying rent, and 1 month becomes 2 months, and then all of a sudden it's 6 months, and then it just kind of downward spirals from there. So, This is, I think, also might be really a good concept for someone who's maybe not as experienced. Now, I know you only offer this insurance product to property managers. Is that correct?
That's correct, Bob. And the reason we do that is really based on what you just said. A lot of investors are not full-time in investing. They have their own full-time jobs. They're doing investing on the side because they watch HGTV and see how great it is to own rental property and whatnot. And that's all great. I'm an advocate for owning rental property, but it has to be done properly. And most investors aren't doing it the way they should be doing it because it's not a full-time profession for them. And so they make the mistakes that us as property managers aren't making because of time. And usually it's a time issue. And so as you're talking about, they look at a tenant not paying the rent and they think, all right, well, I'll let it go. I'll work with the tenant over a period of time. And it's because the investor doesn't have time. They're thinking of, okay, what happens if that tenant leaves and now I have to go through the hassle of fixing it up again and releasing it and all this lost time that I have. And so they mistakenly think that if they work with the tenant and believe these stories of, I'll pay you next week, and pretty soon 1 month becomes 2 months, becomes 3 months, and so forth. And then they end up having to evict them in the end.
Yeah, for sure.
Anyway, and so,
and then we see it on the front end too, like when they move in, not documenting the condition of the property properly, so there's issues on that front too. Okay, so beyond this notion of peace of mind and reducing kind of your worst nightmares, are there other ripple effects that an investor might experience from having this insurance in the background, be it, with their, although it's with their property management company? Does it free them up to do other things that they might otherwise be, worrying about their investment?
So kind of explain what you're trying to, I guess I'm not understanding quite the question there.
Well, I guess if they have that degree of confidence that it's being successful, I guess was the way I'm putting it, might there be other things that they can go focus on rather than being worried about their properties? Maybe looking for other investment properties.
Gotcha.
Are there other things that I mean, maybe it's even in the psyche of the investor that this may pertain to?
Yeah, absolutely. So let me ask you a question back. Mm-hmm. So, Bob, what is really the number one or primary reason why investors are investing in real estate? What are they looking for in that investment?
Well, great question. I think number one is maximizing their net operating income, typically. Mm-hmm. Now, we also have what we call, I don't want to call them accidental, but it's probably the term that we use in this industry the most, accidental investor. And that's someone who's a little different. It might be someone who is moving out of town and doesn't know if they might be moving back in a year, if it's for a new job, and they just can't emotionally break with this home they've lived in, and have had so many life experiences in. So they want to hold on to it. Right. And in that case, net operating income isn't so important, but it's more keeping the option of coming back. But that's a whole different scenario. But typically, cash flow positive, maximizing net operating income, and having the property managed by someone who can keep top tenant relations. I mean, those are kind of the things that we talk about with our property.
Well, you're exactly right. Exactly right. And so, and the reason I'm asking that is because when you're looking at cash flow and what's really affecting that net operating income, I'm assuming most of your owners own single family homes. Is that a safe assumption?
Yes, we focus on that market. We tend not to do multi-tenant dwellings or apartment buildings or HOAs. Yeah.
Right. So when you think of a single family home as an investment, 1 month's rent is 1/12 of that income for the entire year.
Right.
And so when you look at even 1 month, 2 months, 3 months rent, I mean, that could be devastating to the overall performance of that investment. And so, as I just mentioned at the beginning, there are things that can happen to our tenants that are just unplanned for. And so when you have insurance such as this that covers that loss of rent, covers the eviction costs, the legal defense, the malicious damage, those types of things that can really eat at that that net operating income, that gives our investor that peace of mind that they can get into this without having to worry about those things that they can't control when the bad things happen to our tenants. And so it takes a landlord that may have thought about selling to say, you know what, now with this insurance, I can have that peace of mind to rent with confidence, that I can actually put this and have this as an investment property without those type of worries. And for our current owners, it gives them that peace of mind that, hey, if something does happen that is unexpected, a bad thing to our good tenants, then, instead of saying, you know what, this isn't for me, I'm going to sell, now they have that protection to cover those types of things that would normally eat into that cash flow.
Mm-hmm. Yeah, it's kind of the confidence to stay in it and maybe acquire more properties because they know that they're covered and they do have some peace of mind. Do you find, have you heard from any landlords or property managers that the banks like this concept for lending?
That's a great question. Absolutely, yes. When you think about it, what is a bank concerned about with an investment?
Right, they've got a stake in the game too.
You bet. I mean, they're looking at it from how is this going to be performing? What is the cash flow of the property? And so they're looking at it from a business perspective, which they should. And when they see that there is landlord protection insurance that's protecting that cash flow, in a sense, from the standpoint of loss of rent, malicious damage, eviction costs, those things, it makes that banker more confident to lend to the investor.
We've probably all seen the commercials with the kind of annoying Aflac deck, right?
Yep.
And of course, that product is oriented towards healthcare or injury cases for an individual who can't pay his bills or something. But is there a little bit of a parallel there to Aflac with what you're doing? Is it more for the investor?
Other than the annoying part, yes.
Yeah, right. I didn't mean to say your product was annoying.
Yeah, no, I understand completely. But it really is that protection. So I kind of look at it more like an eagle, soaring over and, watching over that investment and making sure that it's protected and giving everybody below that peace of mind. And so, yeah,
well, that's a much better analogy, actually.
Yeah, I like that better than the annoying duck. But.
Okay, I've studied a bit on you guys. I know enough only to be dangerous here. So I think that there are 3 different plans, 2 or 3 tiers of coverage, if you will. Can you give us a brief description? I know there's a lot of detail in there, so we probably don't have time for that. But basically, and kind of generally, what are the 3 tiers?
We have 3 tiers, Bob, which is the essential, which is our base coverage, our premier, and our ultimate is the top level. Now, the beauty of this policy is that it's consistent pricing regardless of the property, regardless of the tenant. It's not tenant qualifying. It's based on the rent. Now, we do not have coverage for rents under $1,000. Now, in California there, you probably don't have too many houses that are renting under $1,000, so it probably doesn't matter in your market. But our sweet spot is basically between rents between $1,000 and $2,000. And then they can have additional coverage up to $3,000 for an additional $100 annual premium. Now, as I mentioned, the pricing is flat. So again, it's consistent regardless of the property. So prices ranges rents between $1,000 and $2,000. Our essential, which is our base level, is $315 annual premium a year plus your state taxes. And then you have the premier, the middle coverage, which is $355 plus tax. And then the ultimate is $395 plus tax. Now, if you had properties that, let's say you had property over $2,000, it was renting for $2,200, you wouldn't have to pay the extra $100 annual premium to get that coverage up to that $2,200. You could just go with the base level, and you'd be getting up to that $2,000 of that $2,200.
Got it.
And so same thing with properties over, say, $3,000. It doesn't mean you can't get coverage. It means that you can only get up to a maximum of $3,000, or they could take the base level and or the base amount and get coverage up to $2,000 for that 315, 355, or 395.
Sure.
Now,
I suppose just is based on the amount of risk that they're willing to take on or prevent, I guess.
That's exactly right. I mean, it's a risk tolerance. And so when you look at what's covered under our essential, which is our base lowest level, it's mainly designed for landlords that are concerned about malicious damage, because there's a $25,000 malicious damage cover under that section, under that level. There is some loss of rent, but the loss of rent is fairly minimal compared to the premier and the ultimate. So, for example, a tenant skips under the essential, it's 2 weeks of cover, but under the ultimate, it's 2 months of cover. So
Sure.
a huge difference, and it's only an $80 annual difference in the premium. So it's kind of a no-brainer as far as the levels. But the landlords would really need to look at the levels, see what they're comfortable with, see what their risk tolerance is to determine which ones they want to go with.
Okay. I just got back from the NARPM conference, the Broker Owner Conference in Las Vegas. And one of the most interesting topics I heard being kicked around out there was this concept of no security deposits.
Mm-hmm.
With your product, you'd still need to take a security deposit, right?
Well, sure. I mean, you could do a no security deposit. What that is, Bob, is a company that's really guaranteeing and backing that deposit. That's
Right.
a benefit for the tenant, not the landlord. Okay.
Right.
So the benefit for the tenant is if they had to come up with all of this money to rent the property, because typically you have 1 month's rent and 1 month as a deposit as a minimum requirement to get into a property.
Mm-hmm.
And so a lot of times, especially in your market, if you're talking a $3,000 rental, that's $6,000
Yep.
that somebody has to come out of pocket. And that's tough for a lot of people. And so that no deposit situation is really for the tenant to say, all right, they're going to charge the tenant a monthly amount for basically guaranteeing the deposit for them is what's happening.
Okay.
And so it's really totally different than what we're providing, because our product is a benefit to the landlord. And so even if you do a no deposit or have a deposit, now that deposit doesn't have to be used for when a tenant has to be evicted or violates the terms of the lease and skips or even dies in the property, and now the rent isn't coming in. And so typically a deposit would go towards that cost, that loss of rent. It would go towards the eviction costs. It would go towards any malicious damage. And now your deposit's eaten up. So even if you had a no deposit type of product like this, now it's backed by this company and you still only have the deposit. And so usually that deposit is gone because there's more charges than just what the deposit can cover.
Exactly. I mean, if bad things happen, you'd burn through the security deposit really fast, and then you'd end up chasing that person, either to get them out of the property and evict them, or chasing them for additional damage in small claims court or something.
That's right. Yep.
Okay. Now, we've talked about the different levels. The name of the product is Sheer Landlord Protection, right?
That's correct.
We've talked about how that benefits the homeowner and the investor, but what about the property management company that's standing behind all this or partnering with you? How does the insurance product benefit them or people like North County Property Group?
Yeah, great question. Bob, most property managers are not licensed in insurance. And so property managers have to really be careful when they're offering any types of insurance. And it's not, and I shouldn't say offering because they're not doing that. Basically what they're doing as their duty of care to their investor is informing their landlord client of the availability of this product, because it's such a value to that landlord client for protecting their cash flow. And so they cannot monetize insurance in any way. So you can't be upcharging insurance. There's no relation that way because that's illegal. But there are some substantial benefits to us as property managers by having this as another product that you're offering. And think about it, Bob. I'm assuming you have competition in your market. I mean, certainly nobody doing it as well as North Country Property Group. But
no, we do, of course. There are a lot of property management companies around, and
you do
try to stand out. But I'm kind of looking at this. This might be one way to do that, especially we also have kind of a premium program in our.
You bet, and you kind of answered your own question.
Yeah.
Is that when landlords are coming to you, it's typical in our markets in this business is they ask you typically one question first. And Bob, I'll just ask you that. What is the typical first question that they ask?
Well, that's a good one. Let me think about that for a minute. They probably ask, well, I'm going to tell you something that blows people away here in a minute, but they typically ask how long we've been in business, how many bad things have happened, right? So here we go. How many evictions have we had? Can we guarantee that, there's not going to be damage to the home? Things like that. I mean, those are the typical questions.
Yeah, those are. But usually the first question that property managers ask, and this is when I'm asking my students in my classes, usually the first one that comes up is, what do you charge? What are your costs? All right.
Right. And there's a certain group of people that would ask that too. It just kind of depends upon where people are coming from. But yeah, right.
That is. And they're usually doing that because they don't have any differentiators from one property manager to the other, because they look on the websites and we're all doing the same thing in their mind.
Yeah, so that's right.
Basically, we become a commodity, and commodities are shopped on price. And so they're looking at our fees. And so back to your question, and really the benefit, this is a point of difference for property managers to help bring on new owners, to help them set themselves apart, to say, hey, we are looking after our investors' best interest, which is cash flow, trying to maximize the investment potential for our owners. And this is a point of difference that nobody is doing right now because we just launched it. So the property managers that become first in their market to be offering this have a competitive advantage. So that's one benefit. The other benefit, Bob, is that when rent isn't paid, property management fees aren't collected because as property managers, we collect our management based on the rent that's collected. And so if there's no rent, there's no management fees. And so when you have insurance that is covering the rent, now the management fees get paid as well. And so that's a benefit. Also, we do know that bad things happen to good tenants, as I mentioned. And typically, and I don't know for you, Bob, but when I lose an owner, it's usually because of a bad tenant experience. And so the tenant had to be evicted. They damaged the property on their way out. They go, you know what? I'm either blaming you, property manager, because you screened the tenants, right? And even though that they didn't realize that they lost the job, type of situation, they're still blame us. And so they either go to another property management company, or they say, you know what, this investment thing isn't for me, and I'm going to sell. Yep. And so when you have this insurance coverage, it helps to keep that landlord longer. And as you mentioned earlier, it helps them to want to invest in more properties as well.
I couldn't agree more.
I could go on with the benefits for property managers.
Go for it. Keep going.
So as we mentioned, with the deposits, whether you collect a deposit or you go with a no deposit type of program, that deposit is typically eaten up when a tenant violates the terms of the lease and has to be evicted, for example. And so it's gone. It's gone to the loss of rent first and foremost, typically. And if there's anything left, it goes to the eviction costs, maybe legal defense, maybe some malicious damage, but usually it's already eaten up by just the loss of rent. And so now when you have the insurance covering those things, the deposit is available for other types of damages. So that's a benefit for the landlord, but it's also a benefit for the property manager, because a lot of property managers are guaranteeing their tenant for a period of time, meaning that if the tenant does violate the terms of the lease and vacates without fulfilling the complete term, they'll release it for no charge.
Right.
So
yeah,
now
we call that our 12-month tenant guarantee.
Yeah, you bet. And so now when you have that deposit available, because it doesn't have to go to the loss of rent and eviction costs and malicious damage, now that's available for those types of costs as well. And so you can now have that deposit to pay your leasing fee, because it's the tenant that's paying it out of their deposit to you.
Interesting.
And obviously, as we know, Bob, our staff, our frontline people dealing with the tenants, dealing with the owners, it's not a very comfortable conversation when something bad happens to the property.
Yeah, that's true.
and none of us like that. And the conversation becomes a lot easier for us when there's insurance. I mean, certainly it's never a great conversation, but when you can tell your owner, hey, you have insurance to cover that loss of rent, cover that malicious damage, the eviction costs, that's an easier conversation than saying, hey, sorry, your tenant had to be evicted. They trashed the property on the way out. And, oh, by the way, you have to pay for it all. It just makes it easier for us as property managers. So happier landlords means happier staff.
Absolutely. The thing I'm going to tell you that I think might blow you away is in our 18-year history, we've never had an eviction.
Wow. Yeah.
Every time I tell an owner that, I always do this, right? Knock on wood. Look, it could happen someday, and it's probably an eventuality, but owners love that. And I think this insurance product could sort of fit into backing that up. Like, look, we're very comfortable that you're not going to have an eviction, and if you have it, we've got your back.
Yeah, you bet.
We're thinking about folding this kind of to start to experiment with it, Dave, and the premium group or the premium property management program. Yeah. I mean, look, this is whether it's evictions or rent not being paid or having to tell bad news to the owner or the investor or the even the tenant. This can be a conflict-laden business. So from my perspective, anything that can give us that same peace of mind we talked about for investors is a positive attribute. Because, I want to sleep at night too. I mean,
you bet. Yeah. So to your point, Bob, a lot of property managers are going to a tiered pricing type of format. Mm-hmm. And so you mentioned your premier type of level, which is the top level. And within that level, property managers are starting to incorporate all their fees into one price and make it really simple for a for that investor. Because as an investor, I want to know what, as much as possible, what my costs are. And knowing that up front is very helpful for me for planning purposes. And so when I have a property manager that offers a tiered pricing, and in that top tier, it's either a flat percentage or a flat fee. I know what that is going to be, and I'm not going to be hit with all of these other charges throughout the term of the course of the management. I know what it is, and so that makes it more palatable for me as the investor. But when I see that the insurance is included in that top tier, that even makes it more valuable for me as the investor. Yeah. And so now that top tier becomes even more of a value for me because everything's included. And that's where we're seeing property managers using the tiered pricing and including the insurance in their top tier to make that top tier more valuable.
Well, it's a great talking point, and it's a unique differentiation, right, for you as a property management company. And I can tell you, we're signed up and ready to go. We just have to do some kind of productization around our premium program to build this in, and we have to work it into our content and our web updates and our collateral. So all those things aren't quite as easy to implement quickly, but we are going to do it, and we're pretty much ready to go. And we're hoping to have it done in April and start offering it, or done in March and start offering it in April. That would be fantastic, and we're really eager to get going. So, Dave, I know you offer some other insurance products as well. I'm thinking in particular of the tenant liability insurance. Can you tell us briefly about that product?
Yeah, you bet, Bob. So tenant liability insurance has been around for a long time. That's not something that we've invented or created. it's been in the multifamily industry for years, and now it's coming into our space more and more. You'll see it through a lot of different vendors offering tenant liability insurance. But one of the things that I really want to point out is that, again, as I mentioned at the beginning, most property managers are not licensed in insurance, and so it's important that you're not doing things and upcharging and monetizing it in a way that is illegal. Mm-hmm. And so with tenant liability, that can be done very effectively by having it as a condition of the lease. And so you're requiring it as a condition of the lease that a tenant has to have a minimum of, say, $100,000 tenant liability, which is typically what it is. And if they do not get their own insurance, now they can go get renter's insurance, and I'll explain the difference in just a moment. They can get a renter's insurance, they can get their own tenant liability insurance, and then add us as the property manager as an interested party, so we get notified that it's in place and notified if it gets canceled, those types of things. But if they don't get the insurance, we will force this insurance on the tenant. And so it's a master policy that we have, and that if they don't get their own insurance, now they are going to be automatically covered and then charged for that insurance as a condition of the lease. And then with that, you can effectively and legally, as the property manager, charge an administration fee to the tenant. Okay. Now, those are things that are covering the accidental damage that a tenant caused. For example, they are cooking bacon on the stove and go up and take a shower, and all of a sudden there's a grease fire and it burns the kitchen.
Yeah, we've had things like that happen. We had a tenant who left their bathing suit in the utility sink with the water running in the laundry room, and went through the phone and never came back. And lo and behold, there was a flood.
There you go. So those are two examples. And those are just things accidental things that are covered by this insurance. And your listeners might say, well, my dwelling coverage would cover that. And that's probably true. Most of them would cover that. But when you're making this a requirement for the tenant to have as a condition of the lease, now the landlord's policy, dwelling coverage, doesn't have to come into effect. And so now the landlord doesn't have to pay the deductible, and they don't have to worry about their premium being canceled or the premium being increased. And so it is a benefit for that landlord. Now, here's where property managers get confused, is really the difference between the benefit for the tenant, which is tenant insurance, renter's insurance, and what the tenant liability is. Because the tenant liability really isn't a benefit for the tenant. It's a benefit for the owner. It's covering those accidental things that the tenant does, but it's not covering the tenant's belongings, for example. Renter's insurance would cover the tenant's belongings. It would cover placing the tenant in another accommodations if the place was uninhabitable, for example. That's renter's insurance. That's a benefit for the tenant. That's a policy that's in the tenant's name. That you cannot monetize because it's selling insurance. And so when you have a product that has benefits in it for the tenants, such as those, and you are now charging the tenant a administration fee, for example, even if you're calling it an administration fee, what you're doing is you have a benefit for the tenant, you're charging a fee for that. That is selling insurance. And so that's where the gray area that property managers can find themselves if they have a product that offers some benefit in it for the tenant. So it's really important that you keep it as a condition of the lease, and it's only for tenant liability.
What's a typical admin fee that a property manager can charge?
Yeah, good question. And it's not something usually you'll see around $3.
Yeah, that's what we.
Yeah. So, you can have it anything you want. We're not suggesting that, but $1, $2, $3. But once you start getting over that, when you're charging, say, $9, which is typical for the policy per month to that tenant, and then charging more than $3, then it's starting to get into the gray area.
$9 for the tenant is pretty darn reasonable. Now, renter's insurance does have liability.
It does.
Into it, right?
It does, but renter's insurance is usually shopped based on the credit score of the tenant. All right. Because it's a policy for that tenant. All right. So when you offer a policy such as this, our tenant liability coverage, it's flat pricing. It's regardless of the tenant, it's still the same $9. All right. And so then making it as a condition of the lease, the property manager can effectively charge an administration fees, for example, $3 per tenant per month. Mm-hmm. And so that's a way where it can become for the property manager a nice income stream. But it has to be done properly. Otherwise, it could be viewed as selling insurance.
Dave, I've really enjoyed this conversation today. Good stuff. Any last thoughts or parting words?
Well, just, when you think about your comment of that you've never had an eviction before, I mean, that's unique in our business. But the thing is for an individual investor, we know that things do happen to our tenants. As I mentioned, the divorce, loss of jobs, all of those types of things. I mean, they can happen. And that one time that it happens to you as the investor, that can be catastrophic, obviously, to your whole investment potential. And so that's where this really comes into play. You know your business, you screen your tenants properly, you do all the right things as a professional, but you can't protect against those unknowns. And so even though you haven't had an eviction per se, it's still out there. There's still that worry. I mean, you look at
the risk.
You look at how many of us have dwelling coverage on our properties. Almost all of us do.
Yeah, I've never had my house burned down, but
I've never had my house burned down either. That's right. But I still have the insurance because what if that happens? And that's the rub, is that these things do happen. They can happen. And when it happens to you, you don't want to be without insurance.
Exactly. Wonderful. Okay. And if someone wanted to get in touch with you or the team at SureVestor, what's the best way for them to do that?
Well, a couple different ways. You can either go to our website at surevestor.com or just call me directly. I'm happy to field calls. And it's at 612-465-0421.
Terrific. Dave, thank you so much for taking the time to join the show. I know you're a busy man, and it's very much appreciated. That concludes today's episode. I would like to make another quick plug to leave the show a positive review. It would mean the world to me and our team. And thank you all, our listeners, for joining the Property Management Brainstorm podcast. Until next time, we will be in the field working hard for our clients to maximize their property value and rental income and maintain top tenant relations. And we'll see you next time.